So how to prepare final accounts under double account system? So profit and loss account in two parts. That is a revenue account and a net revenue account. Under revenue account, we record expenditures and incomes, and whatever the appropriations will record in the net revenue account. So net revenue account is a similar to profit and loss account. So likewise, balance sheet is also prepared in two parts. The first part of the balance sheet is capital account. So we will record all the capital receipts and capital expenditure in capital account. And capital account is the pro forma of the capital account is having three columns. So first one is expenditure at the end of previous year, in the sense opening balance of expenses. So expenses during the year. The third column is total capital expenditure to the date. So whatever the total expenditure to the date, we have to record it in the third column. So likewise, in the credit side, receipts at the end of the previous year. It means opening balances of receipts. So receipts during the year and capital receipts to the date, the total of these two. So this is the capital account, and a general balance sheet will record current assets and current liabilities, as well as net revenue account, other reserve funds. Okay, so coming to the balances, so the revenue account balance will transfer it to the net revenue account. Okay, so whatever the excess of receipts for expenditure will have balance over here in the net revenue account. If the balance is expenses over and above receipts, we'll mention it in the debit side, of the net revenue account. So the final balance of net revenue account is carried to the general balance sheet. If it is excess of revenues over expenses, then we'll transfer it to the balance sheet as a net revenue. Either in both cases, either it is negative or positive, we'll transfer it to the general balance sheet. So the balance of capital account, either we can transfer the difference amount to general balance sheet, or we can show it as the total expenses in the asset side of the balance sheet and the total receipts in the liability side of the general balance sheet. Either we can show separately or the balance amount, whatever appear in the capital account. Okay. So we'll move on to the illustration. From the following balances as at 31st December 2010, prepare revenue account, net revenue account, capital account, and a general balance sheet of GIP Power Limited. So the given particulars, balance as on 1st January 2010. So we have to prepare for 31st December 2010. In this sense, these are the opening balances. and expenditure during the year. So share capital, debentures, sundry creditors, cost of generation, rates and taxes. Okay, for the information, this is the capital expenditure. So we'll show this opening balance out of three columns in the first column, which is having opening balances. So we'll show it in the opening balance in the capital account, first part of the balance sheet, and the expenditure during the year, the second column of um, capital account in the expenditure side. This is the debit side. So share capital. So it's also capital. So we have to show it in the capital account. In the receipt side, this is credit side. Debentures, it is also a source. So we have to mention it in the capital account credit side. Sundry creditors, it is a current liability. In the sense, it belongs to the general balance sheet. Cost generation, cost of generation of electricity. So it is a expenditure, revenue expenditure. In the sense, a revenue account, debit side. So rent, rates and taxes, expenditure, revenue account, debit side. So expenses, this also comes under the revenue account, debit side. Cost of generation, revenue account, debit side. Depreciation, revenue account, debit side. So sale of current, so revenue account, credit side. Meter rent, so meter rent, we receive rent for the meter. Meter rent, revenue account, credit side. Interest on debentures, so interest on debentures and interim dividend, and net revenue account as on 1st January 2010. These three belongs to the net revenue account. So net revenue account is nothing but profit and loss appropriation account. So we have to mention these three amounts in the net revenue account. Sundry debtors, current asset. So general balance sheet, asset side. For energy supplied, it is also other current assets, other cash balances, current assets, general balance sheet. Depreciation fund account. So we have to show it in the liability side of the general balance sheet, because we are not going to deduct the depreciation directly from the fixed assets. We'll just create a depreciation fund and we'll mention it in the liability side. So that is what the treatment for the depreciation as we discussed so far. Okay, let us solve this problem. So revenue account. So whatever the revenue expenses and the revenue receipts, we have to mention it in the revenue account. So we'll come up with the one by one. So cost generation, cost of generation of electricity, and rent, rates and taxes. To cost of generation 42,000, to rent and rates and taxes 6,000. So from this side, another one, expenses of management 14,400. 14,400. So cost of distribution 6,000, and depreciation, it is also a charge against revenues. So sale of current, so it is a receipt, so credit side of the revenue account. So meter rent received 6,000. It is a receipt. In, okay, interest on debentures, interest, okay, sundry debtors. So these are the items relating to the revenue account. So we'll finalize the balances. So it comes around 1,62,000. So the balance which we have to carry forward to the net revenue account is 69,600. We have to carry forward to the net revenue account. Balance brought down. Okay. So interest on debentures. This is the charge, interim dividend. These two items we have to mention in the debit side of the net revenue account. So these are the charges against the profit. And one more balance, opening balance of net revenue account. It is 34,200. So there is no item left to mention in the net revenue account. So we'll finalize the balances. So this one is 1,03,800. So whatever the balance, this balancing figure we have to transfer it to the carry forward to the general balance sheet. So to balance carry forward to the general balance sheet, it comes around 67,800. Okay, and then we have to prepare the capital account and general balance sheet. So capital account is the part 1 of the balance sheet and general balance sheet is the part 2 of the balance sheet. So whatever the capital related items, we have to show it in the capital account, and current assets and current liabilities we have to show it in the general balance sheet, as well as the whatever the transfer amount from the net revenue account and other reserves as well. Okay, so let us move on to the balances. Land, so balance as on 1st January 2010, in the sense these are the opening balances. Two. So at the end of the previous year, in the sense these are the balances at the end of the previous year. during the year, expenditure during the year. So these are the expenditures of capital account. These are the expenditures of a capital account. So during the year. So at the end of the year, this is the total of the capital expenditure to the date for these particular assets. So 1,86,000 and 7,26,000 and 3,01,200. So opening during the year, okay. Share capital 6,58,800. Share capital ordinary shares. Another one is debentures. Do not have any opening and during the year transactions. So you can directly mention in the final balance sheet. So debentures, these are the sundry creditors. Cost generation, okay, sundry creditors. This will come under liabilities of general balance sheet. So general balance sheet, sundry creditors. So the items related to the items which are mentioned in the debit side, I just consider all the things. So only this side. Okay, this one I considered. Cost of generation considered. Depreciation also considered in the revenue account. So meter rent revenue account. Interest on debentures, net revenue account. Interim dividend, net revenue account. Sundry debtors. So sundry debtors, the current assets, the general balance sheet. So this one also other current assets, cash balance, other current assets. So these three, we'll mention it in the general balance sheet. So another one is depreciation fund, 3 lakhs rupees. So as per the procedure, we have to mention it in the liabilities of the general balance sheet, because we do not deduct the amount directly from the assets. Okay, we have to show the full value of the asset in the balance sheet. So depreciation fund. So another thing is net revenue, the balances from the net revenue account. It is 67,800. We have to show it in the general balance sheet. Okay. So there is no item left in the given information. So we have to finalize this capital account. Capital account. So receipts are 8,98,800 and the expenditure is 12,13,200. So total expenditure. So total capital expenditure and total capital receipts. We can transfer the difference amount to general balance sheet, or we can mention it separately in the general balance sheet. So we'll just mention separately in the general balance sheet. So total capital receipts. So capital receipts are nothing but sources of funds. So these sources comes under the liability side. So liability side, we have to mention the total capital receipts on capital account. So which is 8 lakh 98,800. These are the expenses. How we utilize these funds in the capital expenditure, nothing but how we utilize for towards purchase of machinery. So we have to mention it in the total balance, total capital expenditure in the asset side. So this capital account shows the sources of fund and how we utilized in the assets, fixed assets. And we have to treat these fixed assets at cost, like we should not deduct any depreciation from the fixed assets. We'll show it as a separate fund, depreciation fund. So that is why the depreciation will charge it in the revenue account, and that balance will transfer it to the depreciation fund. So finally, this depreciation fund comes in the liability side of the balance sheet. So let us see whether it is equal to assets. So assets are 12,67,800. Liabilities are also 12,67,800. So this is the general balance sheet. This is how we have to prepare the final accounts of the electricity company.